Good evening, everybody. Good evening, good evening, good evening. It's 9:02 p.m., Thursday, April 27th, 2017. What are we doing today? Well, today is Thursday. Tomorrow is Friday. Options expire tomorrow, so we're going to be going over some of the positions that we're in today, figuring out what we're going to be doing tomorrow. So let's just jump right on in and jump to it. Oh, before I do that, Dividend Stock Talk. That's where we talk about investing in dividend stocks for our weekly or monthly cash flow. Using dividend stocks where we buy the stock, look towards the dividends, specifically because when dividends usually pay out, the stocks usually move up. Now, does it happen with all stocks? No, does not happen with all stocks. So how do we know which ones to buy and which ones not? Because we've created some cool software that specifically tells us who's doing what, where, and when. And that's what it's all about. Using the software, tell us what dividend stocks to invest in, buying before the EX date, collect a dividend, get on out, and then move on to the next company. We've been doing this for a few years. We're doing very well. Making more than double-digit returns. Can't really tell you how much because it wouldn't be fair. Don't want you to think unrealistic. But double-digit returns can be anywhere from 10% all the way up to 99%. That's double-digit. When you get triple-digit, that's 100% or more. That's what I'm searching for this year. This year I'm hoping to hit a triple-digit. But can't say that. So let's see what we do. All right. Let's jump on in, see what we're looking at. All right, first thing we want to look at is our dividends on steroids. Wow, we took a hit today. Look at that. Dropped 10 G's today. Wonder why that is. My goodness. BMO went down to 1900. DFS down 2200. M is down 5100. SKT down 1400. Walmart's up almost 400 bucks. Well, let's take a look at them one at a time, okay? First on our list is BMO. So let's take a look at BMO. Bank of Montreal. Basically, Bank of Montreal went sideways for the first part of the year, actually about 6 or 7 months, right on the $64 area. Right around the election time, she jumps from 64 up to the 74 area, goes sideways for quite a bit. And for some strange reason, today and yesterday, 2 down days. Why is 2 down days today for Bank of Montreal? I don't know. Might be something worth looking into. You might want to check into that for those of you who have BMOs along with me. Now, I got BMO back in the 11th. Oh, that's why. That's right, because they paid out their dividend. Okay, let's quickly take a look at that. BMO, we got that in on the 11th, which means the EX date was the 25th, which means we should have been out of BMO on the 25th. Yet, we hung on to it because we wanted to collect a dividend and then turn around and resell it. Okay, so that's why it was. See, we bought it on the 11th. Where is it? BMO right there. There it is again, BMO. Right there, see, 411. 600 shares. Okay, so 11th, which is 10 days prior to the EX date, right there. So what happens on the 26th and the 27th? The stock goes down because it paid out its dividend. What's going to happen next? Let's quickly take a look. Let's bring up the seasonality and see what that says for BMO. Oh, look at that. Oh my goodness. Yes, yes, yes. Go ahead. Tell me. Send me the email. Send me in the chat box. Tell me what wiener I am for holding on to this for longer than I should have. Should have got rid of it 2 days ago. Like I tell everyone. Anyway, this is what I got to look forward to. Look at that little downturn before it goes back up again. Ugh. Well, anyway, BMO, that's what the seasonality chart says. Let's take a look at my software, see what my software says. No sense putting this because we already bought it. Okay, so we already got it. We're already in. We should have been out within 10 days. Average of 10 days. Bummer. Okay, well, we can get a yield of 3.6. Okay, that's not that bad. I could deal with 3.6. What's the target they have for this? They get a 1-year target of 76. Okay, I can deal with that too. a little less than 5% on that one. All right, so, okay. BMO, let's see what the charts look like. All right, get rid of that. Okay. All right, so we into the dividend. Should be able to get out within a couple of days. What it says, you buy it, goes sideways for a little bit of straggly, up and down. Okay, you hit the EX date, which is right here, the red dot. After that, should get out within a couple of days. All right, hopefully that's what we're looking at. Okay, all right, so let's go back to, where were we? Right here. Okay. Okay, so that's the seasonality for BMO. We're going to collect a dividend. We'll probably get that probably Monday or Tuesday. And then Monday or Tuesday we can change the price and get rid of it for what we bought it at. And what did we buy it for? We bought it at $74.10. Wow. It's at $70.89. Okay, so it's still going to go up a little bit. Okay, $74.10. Oh, look at that. Yeah, we should have got rid of that the other day. All right, so that's BMO. So we're going to hold on to it, see what happens next week. We're going to collect the dividend on that. And then we'll readjust our position so that we can sell it for, what was that, $74.10 or $74.11, $74.12. A little bit more than we paid for it. That's a little bit of profit over and above the dividend. Okay, so DFS. As you can see, I'm not too worried about it, only because, they pay out their dividend. They're going to be, paying out their dividend, and we collect some more stocks on that, and then we turn around and sell it for the exact price or more than what we paid for it. And that's the whole key to it. You collect a dividend, and you sell a stock for a profit. How much profit? That's totally up to you. Me, I want to get in and I want to get out. I'm going to wait till Monday or Tuesday and see what the stock's going to do. Because tomorrow, I'm assuming it should go up tomorrow because you have 2 down days in a row because of the impending dividend. All right, so we're looking at DFS. All right, so DFS is basically the same as Bank of Montreal. She goes sideways for 6 months around the 56 area. Right around election time, she jumps up to the $70 area. In the last 30 days, she's been going sideways, and then she's on the $64 area right now. She had 5 down days in a row. Now, we got this one on the 24th. DFS. Okay, so the 24th. So we don't have, we got 2 weeks to go on this one. So I'm not really worried about this. So what does DFS say, look, on the seasonality? Okay, so here we are right now. DFS, as you can see, is going to go up for the rest of the year. Supposedly. This is 10 years worth of data going to the uptrend. That's what the seasonality. Seasonality is basically taking one stock chart and putting it on top of another from year after year after year. Now, I have mine set for 10 years. I want to look at 10 years worth of data. What has this thing done on average over a 10-year period? And this, as you can plainly see, the red, the red line shows it's going on the upward trend towards the end of the year. So I'm not too worried about DFS. All right, let's get out of there. Back to standard. And let's go to M, Macy's. Macy's a household name. Everybody's heard of Macy's. She starts out the year at 40, drops down to 30, then goes into a trading range of somewhere around 35. Hits the high of the year in end of November at 45, and then comes down. Then hits the low of the year at 27. And then from the low of the year, she's been going sideways into the $29 area where she is right now. Okay? Now, what we're looking to get for Macy's is $33.10. And like I told you a couple weeks ago, we'll probably end up holding this until the next dividend. And Macy's, I'm not too worried about them. We collect another 21 shares or 22 shares in another 40 days, I think it is. I don't know. I'll check my calendar, but I think it's about 40 days because we got into here. No, not that one. We got into Macy's February 21st. February 21st. So let's quickly look at this. Okay, put the Macy's. Now, you guys, if you're paid subscribers, you should be able to have a copy of this software. Oh, that's not doing me any good. That's right. Yahoo changed its parameters and nothing's working properly. All right, so that's not doing me any good. No, let's go back to where we were. Okay, so we bought it in February, the first month. So we're looking at another, I'm assuming, around 6 or 7 weeks before we collect again on Macy's. And might as well just hold it. I'm not going to take the $5,000 loss. No thanks. I'll just assume hold it and collect more dividends on it. I mean, it is Macy's. They've been around for over 100 years, and they're still doing well. And like Macy's in almost every major mall in the U.S. All right. Let's take a look at SKT. We're also losing on SKT. SKT. All right, SKT starts out at 35, goes sideways for a little bit, jumps up to the high of the year, 42. The next 4 months, she dropped down to 33, goes sideways for about 4 or 5 months, drops down to the trading range of 31, where she is now. Now, SKT had its dividend on 2 days ago also, on Tuesday, I believe it was. Anyway, on the 26th. So the 26th was a down day because they paid out their dividend. And here is an update today, which is great. So I'm assuming tomorrow is going to be the date of record for SKT. Let me quickly take a look at that. And we're looking at 27th. We want this to go alphabetically. No, Macy's is not there. Macy's is not there. Macy's is not there. Wait a minute, I'm not looking at Macy's. What am I looking at? I'm looking at SKT. Well, let's go back again. Nope. Nope. SKT, here we are right here. So SKT, they had their dividend yesterday. Their EX dividend yesterday. And my goodness, it'd be nice to get rid of this damn thing. All right, they had their EX date yesterday, so most likely, where are they? Right there, 28th, which is tomorrow. Is going to have the date of record. So that means Monday I can turn around and resell it for a profit. And what do we actually get SKT at? We got SKT at 32.88. All right, it's not too far away. It's 31.79, so SKT's not that far off. So we collect the dividend on that. Monday, Tuesday, we take a look and see what the stock is doing then, and then we decide how long we want to hold it before we can reset the sell price to take our profit off that one. Now, Walmart is the newest acquisition. We got that on the 24th, which was this week. She's up, so let's take a look at Walmart, WMT. All right, Walmart opens up at 69, makes a low of the year to 63 within a month, and then within 2 or 3 months, she's up to 75, going sideways in the $71 area for quite a while. And in the last 90 days, she's up to 75. Okay, where she is sitting she's sitting pretty at 75 right now. So let's take a look at the seasonality for Walmart, which doesn't really matter because we're going to be into Walmart for 2 more weeks. We just bought it this week. Okay, Walmart's going to experience a little bit spike right where it is. I don't know. I might want to think about getting rid of this thing tomorrow because we have in the next couple of weeks we have a little bit of a down. It shows it's going down in the next couple of days. That's a 10-year seasonality. Let's take a look at my software, see what that says. WMT. I have to change this. Yeah, yeah. We should get rid of it tomorrow. I want to get rid of that one tomorrow, Walmart, because it's not looking too favorable. Don't get me wrong, it didn't hit the 2.5%, but hey, I'm still up almost $400, so I can deal with that. So remind me tomorrow, because tomorrow's Friday, so we're gonna be on around 3:30 tomorrow to see how the market's reacting towards the end of the week with the the weekly options expiring tomorrow. I gotta say weekly options because not the monthly options. They expire the third Friday of the month, and tomorrow is just what tomorrow? What is tomorrow anyway? Tomorrow is the fourth Friday of the month. All right, it's the last Friday of the month too. Ooh, look at that! The month is almost over. Imagine that. All right, so that takes care of dividends on steroids and see how that's doing. Um, we're only making money on Walmart. My goodness. But hey, we're up 14% for the year, which is, we're up 16% a couple of days ago, 19% a couple of days ago. Anyway, still 14% in the week number, the first month of the second quarter. All right, so let's jump on into the options. I'm sure a lot of you guys want to take a look at the options as opposed to the dividends. Because the dividends are great. They have smaller returns, but they're a little bit more secure because when you buy the stock, you get to keep the stock. You can sell options on the stock. You can collect the dividends on the stock. But when you're dealing with just options and options alone, they expire. You buy them and then you have to sell them before they expire, or you'll lose money. Stocks, you can hold on to them for years, but you can't do that with options. Options is an hands-on activity. You can't buy it and wait to see what it does. You actually have to keep an eye on it and then get rid of it when you makes the profit you want. And if it's not, you know what I mean? All right, let's quickly take a look. Oh, I shouldn't say quickly because it'll take us a while to take a look at this one. All right. That's not it. Here we are, right here. Okay. We got 1, 2, 3, 1, 2, 3, 4, 5, 6, 7, 8. 8 positions. All right, in our option trade. Last week we only had 2. Remember that? Only had 2 positions last week because it was such a slow week. We couldn't find anything decent. All right, so let's take a look at them one at a time. We've got Walmart up, so we might as well take a look at Walmart. Now, we already showed you what Walmart was doing. She opened up the year at 69, went sideways in the 71 area, just about all year round in that nice little trading range that Walmart likes to stay into. And now she's up at 75. Now, what do we have for Walmart? Now, these are options. So let's get out of the dividend thinking mode at the moment. However, we're still using dividends as an indicator for our purchasing of the option because we know when the dividend's coming up, certain stocks have a tendency to move up. Now, if those stocks have weekly options or monthly options on them and it's profitable for us to take advantage of them, then that's what we're going to do. So let's quickly take a look at what we're doing with Walmart. Now, Walmart, we have the 74 and a half call. What that means is we're only going to make money if the stock stays above 74 and a half. And as you can see, it's at 75.44. So as long as she stays above 74.50, we make our money on the Walmart stock. I'm not going to look at TJX because we've been looking at that every week, and it's not doing what we wanted to do. Okay, and we shorted it. We shorted 100 shares. We have to buy it back at 75, and we're not going to buy it back until it actually hits 75. So I'm not even going to bother looking at it. Now, Schwab. Let's take a look at Schwab. SCHW. Charles Schwab. Here we go. Charles Schwab starts the year out trading in a range of 29 for half the year. Right around election time, she jumps up to a trading range of 40, goes sideways for quite a bit. Some strange reason, today she dropped down to 39.25. And where are we with Schwab? 39. Okay, we have the 38.5, 39 call spread. Okay, so as long as it stays above 39, we make all our money. Okay, so I'm happy about that. But we'll have to keep an eye on it because she had a down day. Yes, I'm down day today. So let's see what she does tomorrow, because we could sell it now and take our $750 profit and be happy with it. So we'll take a good look at that in the. See, I'm going to show you guys at 3:30, just before the market closes. But on my own, I'm probably going to look at it first thing in the morning and see how it opens and see what's going to go on first thing in the morning. Okay, so Schwab looks good. Microsoft, let's take a look at Microsoft. MSFT. Microsoft starts the year off way down here in the $51 area. She goes for like 4 months at 51, and then in July, second week in July, she goes from 51 all the way up to where she is now at the $68 area. Now, where are we with Microsoft? All right, Microsoft, we're looking at 66.5, 67. Way into the money in that. Don't need to worry about Microsoft at all. Hey, that's great, because we can trade Microsoft again next week, because Microsoft is paying their dividend in 2 weeks. So we have 2 weeks to trade the weekly options on Microsoft. That makes me a happy camper. Intel, this is our third week playing Intel. And the only reason why we're playing Intel for the third week is because the EX date is tomorrow. So we really should get out of Intel tomorrow. Sorry about that coughing, guys. I really am. Nobody more than myself wants to get rid of this darn thing. All right, she starts off trading around the 31 for a couple of months. And end of June, she goes from 31 all the way up to the high in the year at 38. Drops down to a trading range at 35, and she trades sideways for the rest of the year at 35. Now she's at 37.43. Come on, this is going to be free money again. 3 weeks in a row, 36. I have 150 contracts. My goodness. All right, so hey, 100. I must really be good on Intel. This is the third day, so I'm kind of hoping that she stays above the 36. 150 contracts. Last thing I need is all that many shares. Okay, DHI starts out going sideways, 30 for a couple of months, makes the high of the year at 34, right around July, mid-July. From there, she takes about 4 or 5 months to drop down to the trading range of 27, trades there for a couple of months. And then the end of January, she goes from 28 and jumps up to the 32 area, which she is right about now. So let's quickly take a look at DHI. DHI is 32.5, 33. So she's kind of close. She's 25 cents in. Okay. But the thing I like about this is, see, if the stock goes up, I make money. If the stock stays the same, goes nowhere, just stays the same price, I make money. And she can even go down a little bit, and I still make money. Okay, that's the reason why I trade vertical spreads. And all the numbers have to work out. Just because the stock's going to go up doesn't mean you're going to make money. Okay, everything has to play right in order to make it profitable. All right. DR Horton, that looks good. Okay, so let's take a quick look at DFS. DFS, there we go. Oops, come on, D. Uh-oh. Here we go, DFS. Okay, so DFS trades in a range of 56 for about half the year. Right at election time, she goes from 56 all the way up to 69, goes sideways for a couple of months, then drops down to 64, 65, where she is now. She had 5 down days in a row. I'm almost afraid to take a look at this. She's at 64.32, and where do we have it? 67. Ouch. We're going to take a loss on this one. There is no coming back. I shouldn't say there is no coming back on that, because you never know. Okay, and how much did we lose on this? 1,400. Ouch. Alrighty. It is what it is. Can you win them all the time? No. Make 7 winners, 1 loser. I can deal with it. All right, BK. All right. BK trades in a range of 40 for about 6 or 7 months. Towards the middle of October, she jumps from 39 up to 47 and trades the rest of the year in the $47 area. And 4 down days in a row. I'm almost afraid to look at this one. All right. 47 and a half. So we're close to a 47 and a half. So if she stays above 47 and a half, we make money on it. So somewhere around 47.35, we're going to be breaking even. So we have to wait for this one to go up in order for us to break even. That does not make me a happy camper. But we'll find out tomorrow and see what it says. Okay, so BK. Let's take a quick look and see what BK looks like. BK. There we go. All right, could be average. I'm assuming BK paid his dividend recently. She dropped down, going sideways. We can go up a little bit, depending on where the EX date is for BK. So let's see if we can find out where the EX date is for BK. All right, BK, April 28th. Tomorrow. Oh, really? They're going to pay out its dividend. EX date is tomorrow. So we have that one shot of it hitting 47.50, and hopefully that's tomorrow. See, the way to find out, you just put your stock symbol in there, and then you can hit it's either day, week, month, or list. All right, whatever. I don't need that anymore. Okay, well, that's where we are today. So BK, we have to take a look at. All right, so only two we're kind of concerned of. BK is kind of teetering on the fence, and DFS will probably end up losing on that one. See what we can recover off of that, if anything at all. All right, that being said, let's quickly check and see if we have any questions. If not, we can be out of here and save my voice. My goodness, what is going on here? Okay. How do I pick my target price? Oh, this is how we figure this out. Okay. All right, Julian, I'm going to show you how we pick the target price. Pay attention. It's really not that difficult. All right. Let's get to this stock chart. Let's get to, here we go, Market Watch. All right, today's date is the 27th, okay? First we want to do is isolate what trading strategy we want. Now, I usually go for the biggest bang for my buck, which is the dividend on steroids. Now, I have to buy 10 days prior to the EX date. So tomorrow, so I'm going to make this trade tonight. So what I'm looking at is who's paying a dividend 10 days from tomorrow. Tomorrow's the 28th. 5 days from tomorrow will be the 5th. And 10 days from tomorrow is the 12th. And look at that. Nobody's paying a dividend. There we go, right there, the 12th. And there's only 3 companies. Okay. AAL. All right, let's take a look at this way. What is that? Xilinx Inc. Never heard of them. Skyworks Solution. Never heard of them. American Airlines. Everybody's heard of them. All right, so let's take those 3 and throw them into the software. Okay. Let's reset. American Airlines. SWKS. SWKS. And what was that last one? I was just looking at it a second ago. My goodness. XLNX. All right. Here's the first part of the equation. The software tells you what you're looking at. American Airlines, sorry, 2 years worth of data ain't worth it. SWKS, 2 years worth of data ain't worth it. Okay, XLNX. Look at these numbers. 1.3. Okay, basically tells you you're going to hit your target price within a day or 2 days, because there's no such thing as 0.1 day, so it's 2 days. Okay, so you closed today at $59.99. The high for the last 52 weeks, or the high for the year, was $64.90. The low was $42.37. It's got a 1-year target of $60.52. That's not enough to write home about. I mean, she's at 60 now, 62.50, not a big deal. The only thing I'm looking for is this 33 cents. Okay? That's your target price right there. It closed at 59, so you have the opening of the day tomorrow. Okay? The target price is you're adding the 33 cents onto the $59.99. If you can get it at $59.99. So let's go take a look at the charts on Thinkorswim, and let me first go over the rest of the numbers. The yield is 2.29. Okay, I don't like to trade anything less than 2%, unless it's a dividend king or it has all ones. Very important. The 30-day average, I like to have volume above 500,000. This one has 2.6 million, so that works. So all this is very, very nice. Now, the first two, American Airlines and SWKS, didn't make the cut. That's what the software does. It isolates and gets rid of the stocks you don't even want to bother looking at. Can American Airlines do it? Yeah, it can. But do I want to try it? No, I don't, because there are better candidates, better ways of looking at places to spend my money. A company that's continuing paying out dividends is the company that I want to invest in. American Airlines has only paid out dividends for 2 years. What makes me think that they're going to pay again next year? There's no consistency there. That's why I said no to American Airlines and why I said no to SWKS. All right. Let's go take a look at the 10-year chart. Okay, that little link brings us over to Yahoo Finance, and it's preset for the 10-year chart. So I can look at what the stock looked like 10 years ago. Now that, my friends, is a beautiful looking chart. Look at it. 10 years ago, this thing was around 26, 28 bucks. Okay? She dropped in 08 like everything else did, and from 08 at 16, she's at 64 now. That, my friends, is awesome. Look at all these D's. See? Dividend, 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 dividend. And look at the volume. The volume is the blue line, is the red lines and the green lines in the background. You see them? All right about the same. No huge spikes, no huge gaps. All average. Now, granted, the volume has changed a little bit, but look at it. It's steady. Okay? I like that. Steady volume. The price is increasing, and they're paying out the dividends for more than 10 years. Great. Let's go to the next part of the equation. All right, so I can get rid of that. And bring up this. Here we go. All right, we're looking at XLNX. XLNX. Now, I'll tell you the truth, I've never even heard of these companies. And I could care less, tell you the truth. All right. This is going to be a little fickle. Now, I'm going to explain to you why in a second. All right, this company starts out in the 43, trades for about a month in the 43 area, jumps up, trades for about a month in the $47 area, jumps up and trades 52 for about 2 months, drops back down, 48, and she trades sideways for 58 for the last 3 or 4 months. Here's where it gets a little uncomfortable for me, because I don't know the company, I don't know what's going on. Okay, there's a gap here. Don't get me wrong, I love gaps. It's great. But then again, there's another gap here. Now, there's an old saying with gaps. They have a tendency to want to fill. What that means is this is most likely going to come down and fill this space. And then it might come down and fill this space. So as good as it looks on all the other charts and all the other software, I'm going to say no to this one because I really don't want to take I really don't want to own it while it's filling in the gaps. Sorry, there's too many other good quality companies. But let's take a look at one that might work. All right, DD, is that DuPont? Sorry. Yeah, DuPont. Okay, so it's DuPont, and I believe that's Certified Freight. Certified Freight Industry Holdings. Yeah, okay, so let's take a look at those two. Because it's still, 9 days away. It still could work. So give me a second while I'm going to throw those two into the software. Because I'd love to be able to show you how to pick a price. But with gaps here and a gap there, I'm not going to do it. Okay. Reset. Now looking at DD. Sorry. DD and CF. All right. So DuPont and Certified Freight. 4 days and 2 days. Okay, they both have good volume. Certified Freight has 4.6% yield, and DuPont has a little under 2%. Okay, the DuPont has 81 closed. The high of the year is 82. That's kind of close to the high of the year. Low is 61, and it has a 1-year target of 86. Okay, everything looks great. All right, CF, Certified Freight, closed at 27. And the high of the year, 37. The low, 20. And it got a target of 32. That looks great. CF looks better than DuPont. But let's just jump to the next one. Take a look at the chart for CF. See what happens there. The last 20 years, what has happened to CF Industries Holdings? Okay, this one makes me a little uncomfortable. Granted, they've been having nice volume, nice steady even volume. See that in the background right there? A lot of dividends paying out. This S right here, this purple S, means a stock split a couple of years ago. Now, 10 years ago, we could have got this at about $9. Now she's at 27. Don't get me wrong, it's a nice increase. I mean, you're over 100% increase, for the last 10 years. But why did it go up to 64 down to 27? It doesn't put it out of its running because, hey, I made 100%. Had I bought it 10 years ago, I would have made over 100% of my money, and I would have collected all those dividends. So it's actually a 200% change. See that right there? See, from there to here, it's a 200% change. Gotta love it. But at its peak, it was a 600%. Anyway, not worried about those numbers. How do I pick my stock price? All right, let's get out of here first. Okay, so CF actually makes it. Doesn't make me warm and fuzzy, but let's see what what DuPont looks like. Now, DuPont, 10 years ago, we could have got that stock. As soon as it pops up, it could tell me. Okay. Could have got DuPont 10 years ago at 49. Okay. It dropped in 08, just like everything else did. And she made a nice recovery. She's at 80, which is a little bit less than 100% from 10 years ago. Okay, so that one makes it too. It has some nice dividend plays. It's been paying its dividend nicely. Had a stock split a few years ago. Okay, I can deal with that too. So they both make the cut there. Now let's take a look and see what the charts look like. I hope I'm not losing you in any of this. Okay. Now DuPont I would jump into because that looks a lovely looking chart. Okay, so it starts out the year at 67, trades sideways for 6 or 7 months. Right around election time, she goes from 67 all the way up to the trading range of 79, where she is today. 2 gaps, one here and one there. This one filled. See what I told you about now a minute ago about the gaps filling, have a tendency to fill? One gap up, another gap up. Look, down day, filled the gap. Look, there's another gap here. So we might want to wait on this one. Let's see what CF looks like. Okay. Okay, now CF is all over the place, but most dividend stocks are all over the place. Okay, she starts out the year at 33, drops down to a trading range of 24, trades in the 24 area for about 4 or 5 months. Then from there, makes the high of the year at 37. Okay, drops down to a small trading range at 29. Now, she hits some support here at 26. Okay, it looks like she's on an uptrend. So let's take a look at what she looks like now. Now, this looks like one that I would do because you had all these down days here. You got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 down days in a row, and she has a dividend coming up in the next 10 days. And the software says, hey, it goes up right before the dividend. Let's go to the other software and see what that looks like. This is why we made all the software, so we can find out what's going on. Now, we're looking at CF because it looked better than DuPont. All right. She has her dividend right around the 11th. Here we go. Plot the dividend. There we go. Okay, click onto the average. All right. What happens with certified freight? Just before the dividend, she goes down a little bit, and then she goes sideways. Okay, I'm usually in it for 2 days before we make our target price. This is how we get the target price. Let's jump back to where we were. Okay. Now, remember we have 4 different trading strategies. So you have to remember which trading strategy you want to do. Now, if you just want to collect the dividend, you can buy the stock anytime before the EX date. Okay? Where's your entry? Your entry is anywhere between now and the EX date, which is 9 trading days for CF. 9 trading days between now and when it pays its dividend. So anytime is good to get in. Now's good. Tomorrow's a good day. The next day could be a good day. I don't know. The same with dividends on steroids. You want to get that 10 days prior to the EX date, which would have been yesterday, or which would mean you would have gotten in first thing this morning. Now, had you gotten in first thing this morning, she opened up at 27.57, and she hit a high of 27.63. You wouldn't have hit your target because that's only a 6-cent increase. So what's going to happen tomorrow? I don't know. However, if the numbers look right, you can do an option trade. Now, there are other trades that you can make. You can buy the stock, collect the dividend, or you can collect the dividend's run-up. This is going to sound confusing, but you want to know how to get your target price. The target price is a comfort level of what you're willing to pay for it. Now, CF had 10 down days in a row. Okay? 10 in a row. That's quite a bit. If we expand the chart again, you can see this stock is all over the place. Okay? And we go back to the Yahoo chart to give an idea of what certified freight has done over the last 10 years. As you can see, it's all over the place again. Way down here at 895, and she goes up. What is that? It's 24, and she drops back down to 20, and then she jumps up to, come on, move. Come on. Then she moves up to 27, and she moves back down to 10. Okay, and she goes back up to 21. Stupid thing. I hate when the computers go slow. And she's back up to 21, and then she drops back down to 12. And then you can see she's all over the place. So the dividend stocks have a tendency to be all over the place. And look at any stock. No stock is a solid straight line up, down, or sideways. All over the place. So what I'm trying to say is CF is doing basically exactly what it normally does. It goes up, it goes down, it goes up, it goes down. So is 27 a good price for CF? That's a question only you can answer. For me, I would say sure, why not? But let's take another look. All right, she's at 27.43 right now. If I was to buy the stock, I could buy the stock, hold it for the 10 days, collect a dividend. Oh, what is the dividend of CF anyway? Let's quickly take a look at that. 30 cents. Okay. So let's say, hypothetically speaking, let's cancel this. Let's say, hypothetically speaking, everything looks good for CF, and I'm okay with paying $27.43 for CF because, as you can see the chart, she's all over the place. Okay, and 27. Let's go back here again. This is the year. Okay, she started out the year at 34. Okay, she made a low of 21 and a high of 37. Right now she's at 27. Is 27 a good price for CF? Remember, she got the 30-cent dividend coming up in the next 10 days, or actually in the next 9 days. So is that a good target price? Okay, so you have to ask yourself, am I okay with paying the 27.43 or whatever it opens up tomorrow? Now, when I pick my target price, I honestly, and don't take this wrong, I honestly don't care. I really don't. I want to buy it at the market when it opens. First thing in the morning, whatever the market maker sets for tomorrow is the price I'm going to pay. What's my exit price? Whatever the market maker fills my stock at, plus the 30 cents for the dividend, and I want to just get out. So, as you see, I had a preset with Thinkorswim. It allows you to do that. You right-click on the ask, you come over to Buy Custom, and I scroll down to this one right here, and it automatically fills. It allows me to buy, and it allows me to sell at the exact same time. Now, the neat thing about that is I can buy the stock, and in 2 or 3 seconds later, I can resell it as long as it hits my target price. So my target price is whatever the market maker opens the stock at, and my exit is that price plus the 30-cent dividend. So what I'm going to do is I'm going to, see, there it is. I'm buying 928 shares of CF at the market to open first thing in the morning, and then I'm going to turn around and quickly, as it hits my target of 30 cents over and above what I paid for it, I'm out. So hit confirm and send. What does it look like? Buy 928 at the market to open and sell 928 triggered plus 30 cents over and above the first trade. Okay, it's all automated. Hit send, and there it goes. It's off to the races. So I go back here to monitor, and there it is. So first thing in the morning, as soon as the market opens. Now this is already preset with a 27.43 because that's what the market closed at. So whatever the market maker opens it at tomorrow, that's what I'm going to be filled at. Okay, so I don't actually pick what it is I'm going to be buying, what the price I'm going to be paying for it. I could, let me go back and let me show you. Okay, let's just just right click or left click on that, and it automatically fills 100 shares. Okay, whenever you click on left click, it automatically opens up to 100. Then you have to decide how many you want to buy. So let's say I want to buy 1,000 of them. Okay, let's jump up to 1,000. Okay. Now here is where I get to choose what price I want to pay. Now I can do a limit order. This is where it can get confusing. I can do a market order. I can do a limit order. I can do a stop limit, trail stop, blah, 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 market on close. I really don't know what the LOC means. Something on close. I know that means market on close. But there it is. I can set it, limit price. And let's say I don't want to pay. I want to pay 27.43. Okay, I want to buy 1,000 shares at 27.43. That's how I put my target price. Unfortunately, I have to, if I'm doing it this way, I have to wait till I get filled. Then I have to go in and sell it. Okay, so let's delete that. Let's do it the other way. When you have the preset, like I show you one of the videos, buy custom, come down to my preset, and that automatically fills in the buy and the sell, but it does it at the market price. What I do is just click on here, and I change it to a limit order. Okay, then I can change the limit order to the 27.43, and then I want it at 30 cents. There you go. See, there's a lot of different ways you can buy and set your target. It's totally up to you. But I'm a lazy trader. I just buy it at the market, add 30 cents, I'm done. That's me. If you're counting your pennies and you want to do that, you do what you want to do. This is your money. You do what you want to do. I'm just showing you how I found my target price. Whatever the market maker and everything has. You saw me go through the whole exercise. Now, don't get me wrong. The first two stocks we looked at, they were great stocks. However, there was something missing. Whatever it was that was missing made me uncomfortable not to do the trade. CF had everything going in the direction that it wanted to. That's why I made that trade. Okay? I'm hoping that answered your question. And that being said, let's see if there's any more questions and I can be out of here for the day. All right, that answered the question. So I am out of here for the day and hope you guys